Hello everyone and welcome back to yet another KIFS crypto video, where today I'm going to be talking to you guys about some of the highlights and the most important and interesting aspects of the crypto world in the previous week, everything that happened, and generally things that I think you should be aware of being in the crypto world. We're going to start off with the big winner from the crypto crash being USDC stablecoin, taking a look at some charts as well, and finally moving on to the UST aftermath. Is there any future for algorithmic stablecoins? Now, before I begin this very interesting and exciting video, just a little disclaimer before I start. I am not a financial advisor and therefore I'm not accountable for any losses that you may make in the crypto NFT world, so please do your own due diligence. Leave a like, smash that subscribe button, and comment down below your favorite thoughts about this video are at the end. And without further ado, let's jump right into it. Starting off with the USDC stablecoin, the big winner from the crypto crash. Every market, including a bearish one, has its winners and its losers. Essentially, this one was a winner. Now, this crypto crash that happened, I talked about it in the previous recap, but if you haven't checked it out, definitely go and check it out. But essentially, I just wanted to bring some light on those of you who don't know what happened, in brief, explain what happened so you could understand the rest of this video. Now, briefly, USD stablecoin lost its peg at the start of May's crypto crash. Tether's market cap decreased while USDC stablecoin's market cap increased. Now, Terra and its USD stablecoin collapsed last week in tandem with the market-wide crypto crash. Things looked very shaky for crypto in general and stablecoins in particular. Although the crash produced at least one winner in terms of market cap and potentially reputation, being the USDC stablecoin. Now, USDC, which has emerged from the crisis as the fourth largest cryptocurrency by market cap, is also closing the gap on the top centralized stablecoin Tether's USD, which lost over $7 billion in market cap from its high of $83 billion on May 11th. Now, this entire collapse and this entire disaster that happened last week was absolutely, as I've already said, disastrous. It was chaotic. A lot of investors lost a lot of money and the world just went nuts. Everyone just lost their minds, and it wasn't expected, although some do say that it could be expected. Being in the crypto world, anything is expected, I guess. But regarding this, I wanted to show you guys this little comparison of the Tether USDT chart to the USDC chart as well. Now, taking a look at the daily time frame, it's not that big of a difference, or it's not that big of a deal, not exactly making the point that I wanted to. But if we take a look at the 1 month comparison, taking a look at Tether to USD, we can see this big spike downwards and this incredible chaotic moment that happened over here. It collapsing, completely crashing down in red, and just horrifying to look at. But in comparison to the USDC, which we can also take a look at the 1 month, is exactly where it spiked up and where it became a winner and came out with the victory. So taking a look at them like this side by side, you can really see how USDC pulled through for everyone, and they are glorifying it right now as one of the best, or the fourth in line, I guess, stablecoin in the world. Now, before I continue with this video and go on to the USD aftermath, is there any future for algorithmic stablecoins? I just have to show you guys MargEx, which is, definitely check these guys out. It's the reliable way to trade Bitcoin with up to 100 times leverage, designed by traders for traders. You can start trading immediately with as little as $10. It's so simple. You can take a look at the chart over here. You can take a look at these guys. They offer a broad range of powerful tools to harness your trading skills and boost your profits unlike ever before. You should definitely check them out because of their privacy, their secure trading, and their transparency in every effect. They are so keen on, and they take good care of their community. They value it immensely, and you should definitely check them out because this is the most secure and private, I guess, and transparent way to trade that you will find out there. So definitely check out their price manipulation protection MP Shield system, as well as the trading profits that can be increased significantly by using leverage. And take a look at the numbers over here if you're interested. And it's very, very simple. You simply register, deposit, and enjoy your trading, starting off with this button over here. You have some reviews about them as well, which are all excellent, and just people showing how grateful they are for MargEx. Once again, MargEx, definitely check them out and start trading like a real trader. Now, moving on to the USD aftermath, is there any future for algorithmic stablecoins? The quest continues for the perfect stand-in for the US dollar, but USD's crash suggests that algo stables may be inherently fragile. Now, there are some questions that have been raised as of late after the crypto crash, being, is this about a single flawed project, or is it also about an entire class of cryptocurrencies, algorithmic stablecoins, which use an arbitrage mechanism instead of fiat services reserves to keep their market price stable? Also, are algo stables inherently unstable? As well, what lessons, if any, can be drawn from the week's tumultuous events so that this doesn't happen again? Now, some people say that some algo stables, including USD, may be partially collateralized, but algo stables rely mainly on market maker arbitrage activity to maintain their $1 market price. Now, this professor at the University of Calgary Faculty of Law said specifically they require ongoing demand, willing market participants to perform arbitrage and reliable price information, and none of these are certain, and all of them have been tedious during times of crisis or heightened volatility. I kind of agree with him, and I want to know what you guys think as well down below. And there's always the drawing of the question, is more collateral the answer? Now, Ganesh Viswanath Nataraj, an assistant professor of finance at Warwick Business School, agreed that algo stablecoins are inherently fragile, but only insofar as they are under-collateralized. Kyle Samani, co-founder of Multicoin Capital, largely agreed with him, saying that the problem with USD wasn't the algorithm, but the lack of collateral. So, are algo stables even needed? Well, indeed, a purely algorithmic stablecoin that sustains operational stability without reserves is sometimes viewed as the holy grail in decentralized finance development, Clemens told Cointelegraph, and he added that this is because if it could be attained, it could scale in a capital efficient manner and still be censorship resistant. We need this centralized stablecoin, said the founder and CEO of Ava Labs, followed by fiat-backed stables are subject to legal seizure and capture. A decentralized economy needs a decentralized stablecoin whose backing store cannot be frozen or confiscated. Now, are stablecoins subject to seizure? This is certainly true, but it hasn't been much of a problem historically. In general, he thinks that most people overstate this risk. I mean, Samani, when he commented. Now, there are some consequences for crypto generally, and the question draws up, what are these consequences and how vigorous are they? Well, in the long term, will the Terra USD collapse have a lasting impact on the larger cryptocurrency and blockchain world? Viswanathan Nataraj said that it will help formulate the clear principles of stablecoin design and the need for stable and liquid reserves to back the peg at all times. For regulators, this is an opportunity to introduce rules on auditing and capital requirements for stablecoin issuers. Now, last week's events could even chill institutional and venture capital formation for stablecoin and DeFi project, at least in the near term, suggests Clemens, and it will also likely hasten regulatory policy formation in the US and intentionally around all stablecoin forms. Now, what are the lessons learned out of this entire crash and everything that happened in the crypto world lately? Well, essentially, it is important that it be done within a regulatory environment that has sufficient consumer and investor safeguards and disclosures, Clemens told Cointelegraph once again. But essentially, given that the crypto world and the blockchain industry is entirely in the early adolescence, only 13 years, periodic failures like USD Luna probably should be expected, Harvey added, though we hope the frequency and the magnitudes decrease, as do we all, Harvey, right? So I really want to know what you guys think about this entire project. I suggest you guys take a look at this report and this news statement as well and take a look at it a bit more in detail. I couldn't, but it's very interesting, and I really want to hear what you guys have to say about the future of stablecoins, if there is any, and essentially what your opinions are. Thank you guys so much for watching this video. I really hope you enjoyed it and learned something. If you did, please smash that like button, smash that subscribe button, and comment down below once again what your favorite thoughts about the video are, and I hope to see you all in the next one.